had begun to believe that we had gained control of the situation, we were hit by a second wave of infection. The pace of contagion, the second wave of COVID-19 pandemic, was alarming, stretching the health infrastructure in terms of capacity to handle a surge of this size and speed. To my mind, this has been one of the most impactful incidents in the recent memory, which has touched almost all citizens of the country. Many precious lives were lost. My heart goes out to all those people who have lost their near and dear ones due to this deadly virus. And there could not be a better moment to place on record my appreciation for all the staff members of SBI who dared the pandemic and helped the wheel of economy moving in like that. I'm extremely proud to be part of the SBI family, where each one of us has risen to the occasion in serving the needs of our customers in these trying times. Today, more than 74% of our staff and their families have received at least one dose of vaccination. We also endeavor to support the broader ecosystem that we function with by way of helping all our partner VCs, approximately 70,000 members, in getting vaccinated. The sharp rise in COVID cases led to reimposition of localized containment measures in many states and cities, impacting millions. While no nationwide lockdown was announced this time, the local restriction imposed across states have had a significant distressing impact on small businesses, their employees, and supply chain of the large corporates. This is evident in the business activity index published by our economic research department. This index is based on the high frequency indication like weekly food arrivals, labor participation, Google mobility, Apple mobility, RTO revenue collection, and electricity consumption data. The index declined between March 21 and May 21, which was the time of peak infection. Thereafter, the dynamic show improvement in economic activity, with the value moving up from 67.4 in May 21 to 94 in July 21. The SBI Composite Index, which is an indicator for manufacturing activities in Indian economy, based on real-time data, also declined between March 21 and May 21, but has since started recovering from June 21. All these not only impacted business development of banks, but also impacted collections during the quarter due to restriction on the movement of staff in the field, as well as due to concern for health and safety of our staff and the customer. With this backdrop, I am pleased to announce that the bank has done well on most of the profitability parameters during the quarter. In respect of asset quality also, I am satisfied with the outcomes. Let me give some color on the numbers. As far as the net profitability is concerned, the quarter has seen a number of 6,504 crores. This has increased by 55.25% on a YOY basis and is the highest quarterly profit posted by the bank ever since the year 2008. Operating profit has increased by 5.06% YOY basis. Net interest income has also increased by 3.74% on a YOY basis, even in the falling interest rate scenario. Domestic NIM has declined by 9 basis points, but as the credit offtake improves, we expect improvement in NIM going forward. Non-interest income has increased by 24.28% on a YOY basis on the back of uptick in almost all line items. Operating expenses have increased by 13.21% YOY on account of increase in overheads as well as staff expenses. While the increase in staff expenses is largely on account of enhanced salaries following wage revision that happened last year, the YOY increase in overhead is more a function of subdued overhead expenses in quarter one last year due to nationwide lockdown. When it comes to business growth, the domestic deposits have grown by 9.19% on a year-on-year basis, with higher growth coming from low-cost CASA deposit. Current account deposit grew by 11.75% YOY, and savings bank deposit grew by 10.55%. As a result, our CASA ratio has improved by 63 basis points on a year-on-year basis. Cost of domestic deposit has also declined by 60 basis points, and it stands at 3.88, which is the lowest in the market. Advances growth, of course, it's a matter of concern, but nevertheless, we have seen that the personal retail credit has grown by 6.47% on a year-on-year basis, with home loan book growing by more than 11% on a YOY basis, whereas other personal loans are growing by more than 25% YOY basis. SME and Agri have recorded growth of approximately 10% YOY basis. Corporate advances, however, have witnessed a decline by 2.33% on a YOY basis, as the limit utilizations have been low. However, if we add the numbers of commercial paper and corporate bonds issued on behalf of corporate customers, corporate credit has grown by about 0.45% on a year-on-year basis. Whole bank credit has witnessed a growth of 6.27% on a YOY basis. The commercial paper and corporate bond book issued on behalf of our corporate customers now stands at 2.12 lakh crore. Limit utilization is just about 41% in the corporate book. Actually, limit utilization is short by 41%, 60% utilization is something which you have. As far as the asset quality is concerned, you will see that while slippages appears to be comparatively higher on a YOY basis, GNPA and NNPA ratio have come down by YOY basis. Let me put this in the context of last 1.5 years since the outbreak of the first wave of COVID. First, the slippages were very low in Q1 last year, as RBI had extended moratorium on repayment of loans. Secondly, collections were severely constrained in this quarter due to limited mobility and concerns around health and safety of our staff as well as customers. With fresh slippages of rupees 50,666 crore during Q1 financial year 22, our slippage ratio stands at 2.47%. For the quarter, GNPA and NNPA stands at 5.32% and 1.7% respectively. However, with the easing of lockdown in most parts of the country, effective from 16th June onwards, collections have already started moving until 31st of July. We have been able to recover almost 4,700 crore plus from the Q1 financial year 22 slippages. Factoring this recovery, the effective slippage ratio for Q1 financial year 22 stands at 1.72% as against 2.47%, which stands as on year 2021. We expect the recovery position and the consequent slippage ratios to improve in the coming quarters. Another positive in asset quality is the consistent decline in the credit cost, which has come because of lower requirement of the aging provisions. We have received applications of rupees 7,300 crores in the restructuring phase 2, out of which 5,246 crores have already been restructured. In addition to the provision requirement against restructured accounts, we have also made adequate provisions for the pending applications. As far as the capital is concerned, our capital adequacy ratio stands at 13.66% and it has improved by 26 basis points on a YOY basis. This is without considering the Q1 profit of 6,504 crores, which is equivalent to another 29 basis points. We have a comfortable capital position with the capital adequacy ratio well above the regulatory requirement, and we expect our internal accrual to take care of the normal business growth requirement. Incidentally, the liquidity available with us is also quite sufficient to support any of the credit growth requirement going forward. Digital leadership, of course, is one of the main focus for the bank. The bank has been continuously investing to keep pace with the new age offerings and technology-driven initiatives and has rapidly developed leadership across the digital channels. The share of transactions through the digital channels has been continuously improving and has touched 75% as at the end of June 21. The bank continues to be a very significant player in debit card spends as well as internet banking and mobile banking. The share of alternate channels in the total transactions has increased from 93% as on June 20 to 95% as on June 21. With more than 40 million customer registrations and adding on an average about 30,000 daily registrations, YONO is actually helping generate sales and expand business for the bank. During the quarter, we have opened more than 9 lakh accounts, savings accounts through YONO, and have disbursed more than 2,400 crores worth of pre-approved personal loans through YONO. For helping the customers during pandemic, the bank has launched a scheme called SBI Q1 personal loan for availing COVID treatment at a very low interest rate of 8.50%. Amount disbursed is almost about more than 1,000 crore. This scheme we started towards the fag end of June, but we have seen very good traction, and we are happy to offer a helping hand to all those who need at this critical hour. Other than these, we have introduced several enhanced functionalities on our YONO app, like the download of the tax invoice for IRCTC ticket booking, customer awareness initiatives, advisories via push notification, etc. As far as our subsidiaries are concerned, we are very proud of the value that our subsidiaries have created for all the stakeholders and most importantly for the customers. We have subsidiaries which have scale and are leaders in their respective segment. We will continue to nurture these subsidiaries and see them taking rapid strides. Overall, it has been a reasonably good performance under the circumstances that we were in, and we expect further improvement in our performance going forward. With these opening remarks, I now open the forum for questions. Thank you.
Thank you so much, sir. I now request the media to raise their hands for the question. First, question. We'll start with Restructuring of ABCD. Hi.
Hi, Mr. Khara. Just wanted to get, your watch list stood at about 11,500 odd crores in the previous quarter. Could you give us the current number for this quarter and also some out for asset quality for the coming year? Last year, you said you would be able to contain slippages and restructuring within the 2% mark. Is there a similar guidance you could give us for this current fiscal as well?
Ritu, ideally speaking, this will be our endeavor and effort to keep the slippages, but nevertheless, I must not hesitate in saying that we have seen a very tough first quarter, so it is too early for us to really come out with any kind of a guidance. But nevertheless, our endeavor within the bank would be to keep it contained within 5%. 2%. Within 2%, sorry. Within 2%. And your other question relating to the watch list.
June 21, we indicated 11,303.
Yeah. So we have actually indicated about 11,303.
Almost similar to what we had.
It would be almost similar. We expect a similar kind of a trend.
Next, we'll go with Saloni Shukla from the Economic Times.
Hi, sir. Good afternoon. Just wanted to get your sense on the slippages. Sir, you said that you've had a tough quarter. If you could give a sense on where these slippages are coming from, and you also highlighted that about 47 billion odd of this has been already recovered. So if you could give a sense on how much recovery you could be expecting from this. And so gold loans have risen sharply about more than 300%. So while other banks and non-bank lenders have seen issues.
Sorry, Saloni, we missed out somewhere.
And would you tighten your LTV ratios there? And just slipping in one question more on collection efficiency, sir. The June quarter was really tough. You guys had to really go slow on collection efficiency. So if you could share, the number there and what's the sense do you see like, because you're already in August now. So what's the sense there? Thank you so much.
Well, as far as the slippages are concerned, we have seen the slippages coming from the SME and also into the Rebu sector, which is the real estate home loans, which are actually the home loans. So I think when it comes to the pullback, we have seen a decent pullback also coming back from the home loans and also from the personal loans, whatever were there. SME sector, of course, is a little more sticky, and but hopefully we are seeing better traction for the restructuring which is coming from SME sector. And I think we have seen actually out of the 7,300 crore of the restructuring request which has come in, about 1,400 has come from the SME sector, and we have already restructured about 1,100 crore, and very small amount is left out, but we have already provided for that, and the remaining has come from the other loans. I think when it comes to the behavior going forward, I expect that since the lockdown is something which is almost it is not there in the country anymore. The revival of the economic activity is somewhere seen around. And as I mentioned in my opening remarks also, the economic activity index number is going up. So these are some of the very positives. And I would also like to mention the slippages which we have seen are essentially have come in very unusual situations and the circumstances, which are essentially on account of the lockdown which was seen. I think once the economic activity comes back, these slippages also will be in a position to pull back, and that is something which has been validated by our efforts, which we have seen in last about 1 month and 1.5 months, when we have seen that about 4,700 crore worth of slippages could be pulled back. So I think with that in mind, it looks like that if the economic activity is back on track, our ability to show much better performance in terms of the asset quality will be maintained. And also the other question which you mentioned about the gold loan, which I missed out in parts, which I could hear in parts only.
I'll respond.
Yeah, please.
Saloni, on the gold loan part, our usual NPA percentage is about 0.8%.
Okay.
And it went up to 2.2 as on 30th June. As we said, the pullback happened in July.
Okay.
And we stand around 1.3% now. There's a marginal increase over the March level. And even this level also is coming down every day, because the people are able to come to the bank and pay small amounts to regularize the accounts. I don't think there is any concern.
And we have got a comfort in the loan to value ratio also. LTV also
65 to 70%
is just about 65 to.
Sir, can you give a breakup of the slippages? So you said it's come from home loans. If you could give the exact number.
In fact, I would give you the slippage ratio. In the home loan, the slippage ratio is 1.53%.
Okay. Okay, sir. Thank you so much.
Thanks, Saloni. Next, we go with Shan Ghosh from Liveman.
Hi, sir.
Hi.
I wanted to ask you something about the retail asset quality. So, despite the majority of your retail loans originating from government employees and other salaried borrowers, asset quality has deteriorated sequentially across all segments, as you presented. So how bad is the distress on ground that even such borrowers are defaulting? That's one. And the second is, could you give us an outlook on retail asset quality in the next couple of quarters? Where do you see that?
Well, when it comes to our express credit, our 90% plus loans are to the in fact, this is all to the salaried employees. And out of that, I think about 75 to 80% are to the government sector, defense sector, state government or central government, or the public sector entities. In the express credit, in the express credit, our NPA stands at 0.65%. So there we hardly see any stress. When it comes to home loans, almost about 50% of the book is to the non-salaried class. And our average ticket size happens to be 30 lakh rupees. So as I was mentioning, that many of the SME borrowers also would be the one who would have availed the home loans. So I think the essential stress which you have seen in this book is on account of the disruption in the cash flow for the SME. And once the cash flow comes back, and as we have been maintaining in the past, our home loan borrowers are the one who are raising these home loans for the first time. So they are the first time home buyers. So there will be all effort and endeavor on their part to honor their obligation. And we hope that it is not as much of a concern. Though as on 30th June, the GNPA in home loan was 1.39. If we reckon the pullback which we already affected, it comes back to 1.14. And hopefully we should be in line with less than 1% in home loan going forward. The other area where we had seen some stress was in terms of personal gold loan. And personal gold loan, the stress was essentially on account of the inability of our staff to reach out to the customer and affect the recoveries. And this is something which is very much effort elastic. There, the NPA ratio was 2.24% as on 30th June. It has already come back to 1.49%. And I hope that going forward, with the improvement in the economic activity and with the increased mobility, we should be in a position to pull back and we should come back to the near normal situation going forward.
Next, we'll go with Mr. Abhijit Khara from Business Standard. Sir, if you could please accept the request to unmute. Next, we'll go with Mr. Mayur Shetty from the Times of India. Sir, if you could please unmute yourself.
Sir, can you hear me?
Yeah, who is this?
This is Mayur
Mayur.
Shetty, sir, from Times of India. So my question
Yeah,
was
Mayur.
on recoveries. A lot of banks have reported recoveries on account of Kingfisher. Did you all have any large recoveries in the first quarter?
Yeah, we did have. We actually, it keeps on happening quarter on quarter basis. And this quarter we had almost about 1,592 crore on account of Kingfisher.
And so on telecom, you all have a large exposure. How much of it is stressed?
Telecom exposure stress, yeah.
Yeah, so for the moment, it is not stressed. And we are looking, there is one particular account where the exposure is large. And there we are following up very, very closely. And all of us are, of course, concerned about it. But by and large, it is the telecom thing is okay.
Yeah, telecom exposure, other than that, I think we'll be taking all possible steps to ensure that we should insulate the balance sheet from any such kind of a potential threat.
Right, sir. And on recoveries, do you expect the pace of recoveries to continue during the rest of the year?
I think it will. Are you looking for corporate recoveries? Corporate recoveries, I expect that we will have. We will have a good trend going forward.
Right. Any numbers on how much?
It would be too premature for us to really indicate because, efforts are there, and whatever stress we normally visualize, we try to see that we have adequate cushion available for such stress in the balance sheet.
Thank you, sir.
So with time, Mr. Abhijit Khara.
Yeah, sure.
Hello, Mr. Abhijit Khara from Business Standard. So can you hear us?
He's saying that he's not able to hear Chairman. Send him a message.
So we'll just.
Maybe he has to rejoin.
Yeah. Send him.
Nupur Anand from Reuters, please. Nupur, can you hear us?
You have to unmute him.
Who we have? Nupur Anand. Hi, Vishwanath. This is Gina. Can you hear us?
Yes, hi.
Hi, Mr. Vishwanath. Please go ahead.
Sir, sorry, quick clarification. You said home loan, the slippage ratio was 1.53. Is that what you said, sir?
0.38.
1.39. 1.39. 1.39, which has actually come down. If we reckon the recoveries which we have affected post 30th June, it is actually at 1.14 now.
Okay. Sir, just trying to get a sense of this telecom account that you had mentioned earlier. Now, according to both promoters in this case, there is really no future in terms of what they are going to do from their end, and they are asking for government support. I'm just trying to understand, as bankers, is there anything you need to do at this stage? I understand that there's no default, but it's according to that letter that has gone out publicly, it seems that the destruction of the company, or this irretrievable point of collapse that he's referring to, seems to be very near. So just trying to get a sense from you as to what can the bankers do at this stage.
I think we'll have to wait and watch till the final verdict comes. But nevertheless, we have to ensure that we should adopt all possible measures to insulate the bank's balance sheet.
What would those measures be, sir?
When it comes to finance, what could be the measures?
No, and the question I'm asking is bankruptcy the only option, because it's not really done very well for other telecom companies which have gone there?
I think it is too premature to get into that kind of a stage. We'll have to wait and watch, and let's see. Let's hope. I think it's too early to really visualize what all can be done. But we are all prepared for all kind of possible steps.
Sure. One additional question. So you said about 50% of your book is to the the home loan book is to the non-salaried class. I'm just trying to understand if there is any recalibration on that side because of the kind of stress that is coming up now, and we're not clear when the stress is going to abate really.
Oh, no.
No, as of now, there is no such recalibration attempted. And as I mentioned, that this is essentially on account of the kind of a challenge which SMEs face in their cash flows, and
Sure.
those challenges were essentially on account of the reasons which are beyond anybody's control. And once the recovery of the economic activity is there, once the SMEs cash flows are repaired, I'm sure we'll see much better traction in terms of the recoveries and those home loans also. But nevertheless, the window relating to the restructuring of such home loans was available, and they have reached out for the restructuring which has been which has been offered to them.
Thank you.
Thanks, Vishwanath. Next, we'll go with Mr. Alek Andre from Informist Media. Alek, can you hear us? Alek?
Hello, can you hear me?
Yes.
Sir, in terms you spoke about the SME stress, now you have recourse to the restructuring as well as the ECLGS. What is the approach you all are taking as far as handling the stress of the MSME sector is concerned? And secondly, I just wanted to run two numbers. What is the total recast under the first and the second rounds, as in the August 6 and May 5 circular?
Yeah, we have the total restructuring is about 12,000 crore.
12,995. Phase 1, sir.
Phase 1, it was 12,000.
995.
995
Phase 2
crore.
is 5,246.
Yeah, 5,246 is phase 2, 12,995 is phase 1.
Out of this, SME constituted 1,122 in phase 2.
1,122. Okay, this is already done, and some are in the pipeline, you said.
Yeah, 275.
25. Just a small number is in pipeline for SME.
Okay, so within ECLGS and restructuring, you said this is the disruption in the cash flows because of the second wave. How do you assess which goes for which kind of SMEs?
No, generally these are the small value SMEs who are affected, and when it comes to the options which are relating to GCELS or the restructuring, when it comes to additional limits to be made available, then of course the GCL is something which is essentially on account of the disruption in the receivable cycle. And when it comes to the repayment, constraint to the repayment, then it would be a restructuring which would be there.
How much is the ECLGS book, sir, total, including the April-June disbursements?
So the total amount sanctioned was 31,000. We have disbursed 26,000 crores, and the current outstanding is about 22,000.
Okay, and sir, COVID book you had mentioned earlier, you'll be disbursing, including the home loans and to other, vaccine makers. So how much is that total book now?
The Kavach which we did, personal loans which you are given, that has crossed about 1,000 crore, and the remaining would be what?
Yeah, but you see, in terms of healthcare book, we have launched a scheme called Arogyam for healthcare infrastructure. We have I think, pipeline about 2,000 crores.
Sir, other banks have mentioned about some sanctions in the corporate sector. In case of SBI, do you have any proposals that may turn into disbursements in the coming quarters?
Yeah, we do have a decent amount of sanctions which are already in place, and it is as high as almost 200,000, 2 lakh crore kind of a number which is already there, and the further proposals which are under process are about 1 lakh crore plus. That is the kind of a number which we have.
2 trillion.